Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Welcome to the Friday, October 21, 2022 Market Plus. Joining us again, Naomi Blohm. Naomi, you talked a lot about a lot of global stories. We've all gotten a really good geography lesson over the last few months here, especially the last 2 years since COVID. The American farmer has to contend with a whole lot of stuff globally that they didn't have to before. One, you kind of mentioned during the main program about China, but we didn't even cover the Congress that's going on right now. President Xi, president if you want to use that term, another 5-year term. What does that mean, and what should we be looking at in messages he might be giving us?
This weekend is when we should get more play-by-play and actual words from that conference and what their next 5 years is going to be looking like. So we're going to try to get a better picture of what their goals are for their economy, how they're going to fix what's going on. We're going to get a better picture of how are they going to lax some of their COVID restrictions, because they do need to get people back to work. Now, my personal opinion with COVID in China, I part of it is, save face, and they want to say, no, we have a zero policy, so zero policy is zero policy. But I really think personally they were low on food. And I think that they needed to kind of ration things out until harvest got done. That is absolutely just my personal opinion.
And that's why they did lockdowns, you're saying?
And that's why lockdowns extended.
Okay.
That's my very personal opinion. And then, with China buying the amount of, beans that they have been buying recently, they're still trying to get their claws everywhere they can around the world to just secure themselves. And when he gave his speech earlier in the week, I think it was the word security was used. I think it was like over 90 times. So top of mind is protecting themselves first and getting what they need to have first and protecting their people. So we're going to see, what is their plan globally? How much are they going to try to spread their web? What are they going to be doing for food demand to remain self-sufficient in the places that they need to be importers? They're going to, I think, continue to try to spread out who they buy commodities from around the world. Like we talked about in the show, you can't rely on one hemisphere. It's got to be both hemispheres. So I'm very curious to see that wording, and that'll be out this weekend.
But what if some countries reduce their global options of where they buy stuff because of what goes on in a certain country? Maybe we don't want to do business with China. Maybe we don't want to do business with Russia. I'm not saying just the United States, but that could upset the apple cart because of the things that were not available in mid-2020.
Yeah, that's a great point. And that could be something that happens as well. Right now, though, the world is low on commodities, low on grain, low on oil seeds, low on some of those things that countries have to have so they can stay in power. If your people are not eating, they go crazy, and then you get ousted out of power.
Yeah.
So food is utmost security right now. Different ways of production practices will be important to watch. The global wheels are spinning, and the people who are in power continue to turn as well.
The people in power in the control room say, let's move to some of the questions. Let's go to Tim in Sioux Falls, South Dakota. Naomi, what is your take on the similarities in live cattle to the 2013-14 seasonal charts?
Very similar. As far as market prices working higher, we have the drought from 2012, so then cattle prices start working higher the following year. And we have lower numbers of cattle, and so that's, of course, pushing prices higher. And I've said on the show, recently, too, in 13-14, I, at the time, was convinced that we would see demand for beef fall because I'm like, no way people can afford these high-priced beef. And I was totally wrong because they still had jobs, they were working, they cut back in some regards, but there's not a substitute for beef. So right now, as long as people are not getting laid off, they're going to still be buying beef. And it'll be probably a similar pattern where instead of maybe 1.5 pounds of hamburger in your spaghetti, you pull it back to 1 pound. But they're going to be eating that beef. And so until I see people get laid off, I'm still friendly to the cattle market.
Okay.
And especially our export markets being ahead of schedule and the best ever, other countries in the world are buying American beef also.
Let's get political a little more.
Bring it on.
Bring it on. Jake in Indiana wants to know, I asked you via Twitter, with another large release from the Strategic Petroleum Reserve, and it's running at a 40-year low. What, if any, effect will it have on ethanol demand? And are continued releases bullish ethanol and corn in general?
I got to bite my tongue.
That's why I said, let's get political.
Okay, so with the reserves being drawn down, so yes, those are short-term things that help, put a little bit of supply on the market, of course, especially ahead of elections. People feel a little bit better when they go to the polls because they're not spending crazy amounts of money on gasoline. But then we have an issue of we have short-term reserves, lighter supplies, and that's there for legit national security issues. So now we have a president trying to figure out his web of who are we going to be buying crude oil from, and who are we going to be friends with, and who are we needing to stay away from, especially with all of this hype with Russia, and how that's going to be affecting Europe. And so, obviously these pipelines are not going to get, up and running anytime soon because that is this administration's policy. So it's a precarious situation. I don't know what the answer is going to be in terms of where we're going to be buying this more oil from because, Biden said, well, when it gets down to, what did he say, 65 or 70 or something, then he would start buying and trying to fill the reserves. But maybe he should look at a crude oil chart because $75 was support and we were already there and back up. So as far as how it goes to ethanol, listen, people are still driving. And we saw that on the weekly energy report this last week. We saw a drawdown in supplies as far as the energy goes, and we saw our weekly ethanol numbers tick higher. So like I said, as long as people are working, they're gonna buy the gasoline. My drive here, still packed. The roads are hopping. People are out and about. They're still moving. They might be cutting back in some regards on things, but the demand is there. Ethanol's future continues to be bright for now.
Even if you're one of those remote workers for 1 day, 2 days a week, you sometimes then might think, well, I've saved money, therefore I can spend it somewhere else. I don't have any knowledge. I'm just saying that's a thinking I know that's out there. Yeah. It's a thought. Anyway, all right, we talked a little bit about basis. I want to get with Andy here and his question. And Glenn, we're going to kind of mix in your question a little bit here too. Andy wants to know, what is basis going to be in March if we are seeing even and positive during harvest? And Glenn wants to know, will we see some firming and will only be based geographically?
I think geographically is the biggest part to that answer because it's multiple answers. We have corn deficit areas because the crop was horrific. So that's its own beast. We have positive basis right now and trending higher in other places because they are wanting to get like soybeans out west. So we are seeing stronger basis in the Dakotas because they've got to get those trains out and going before we have this potential strike in the middle of November. And then, of course, the river basis is all different there because of where it's lower, but they're dredging and they're going to keep product moving. So it's not like the river's going to stop, but of course it's slower than normal. So there's too many moving parts right now to know for sure what basis would be in January, February, March. But again, it comes back to the bottom line situation that our supplies are tight. So basis should stay firm, but if the railroad strike happens, then that'll make basis fall apart up in that region. If we can see the rains come through and the Mississippi River comes up, well, then maybe we see basis strengthen along the river. So it's going to be moving.
But the river's not going to just all of a sudden start to flow. I mean, you look at the parched soils. Mike Steenhoek was our guest in the MTM podcast this week. He talked about it. He goes, even if it rains, and everything that fell this summer was into parched soils. It wasn't going into the rivers.
Yeah, that's a good
We're
point.
still in all of these dry areas. And so even if it does rain, it doesn't matter.
That's a good point.
In the near term. All right, we're going to close with Betsy's question, back to the wheelhouse of dairy. Betsy wants to know, will we have enough demand in dairy even with a looming recession? So again, it's the argument of, are we or not in a recession? You talked about demand being good at the home company.
Yep. Yeah. So, I don't want to say it's a joke in my town, but we have large cheese companies. I live in Fond du Lac, Wisconsin, so we've got a lot of large, major, important cheese companies in that area, and the joke is always that cheese is recession-proof, because we can use it on so many varieties of food, obviously, and it's the demand is there. So even though you might be not making different types of, I don't know, like a gourmet food or something, you're still kind of putting cheese on every little bit of a product. And if you're going to McDonald's and not to, something else, you're still getting, a cheeseburger. So you're putting cheese on your cheeseburger. So what I would be watching more for dairy would be what our export market does. I think that's going to be the factor going forward. If we start to lose export demand, that would make me a little bit concerned because our domestic demand, I don't think, would increase more than what it is to offset export demand. But if our exports can stay strong, we should have still a friendly demand story, but I don't know that it's going to be friendly enough to offset this increase in milk production coming down the pipe here. So nothing negative, though, I can tell you that.
And nothing negative when you come to see us either. Thank you so much.
You're welcome. Thanks
for having me. Naomi Blohm, everybody. Next week, we're going to look at another dairy story. This one, we're going to talk about a producer's search, one of them for an additional revenue stream, and Ted Seifert will analyze the markets. I'm Paul Yeager. Thank you so very much for watching, listening, or reading. Have a great week.